Thank you, and good to be with you all. For those of you that are not familiar with me, my name is Amir Adnani. I'm an entrepreneur and specializing in the two yellow metals as the founder of two companies here that I'll talk about quickly, Uranium Energy Corp and Gold Mining Inc. Both gold and uranium have been in very long bear market cycles, and so both stories in my mind are for contrarian investors, and hence why this is titled Two Yellow Metals for Contrarian Investing. We'll start with Uranium Energy Corp. UEC is a US company based in Corpus Christi in South Texas. That's our hops and processing plant. And what I really want to start with is maybe a few slides on the macro with uranium and nuclear power. We always get a lot of questions on this. There's after many years of a down cycle, I think it's important to talk about some of the latest things that are happening in the sector. So starting off with that, I just want to always remind everyone about this picture and what it really stands for. The fact that 3 barrels of uranium can generate the same amount of energy as 100,000 barrels of oil. This is a really important reason why we're seeing unprecedented growth in nuclear power globally, coupled with the fact that air pollution is public enemy number one in some of the largest cities of Asia. In the last few years, we've seen 28 new reactors connected to the grid, record number of reactors under construction in the world today. And so when we look at this demand side for uranium, which is nuclear power generation, to generate clean baseload electricity, we're seeing record numbers. But on the supply side of the equation, we've had an oversupplied market. In 2016, the supply of uranium peaked at about 160 million pounds. We've had a number of supply cuts, and we project in 2018, production will be at 135 million pounds worldwide, where demand is going to be at about 192 million pounds from reactor requirements. Even though there will be above ground inventories available to the market, we are starting to see this year and going into next year a supply deficit in the uranium market. Up until now, we've had a supply surplus from a supply demand point of view. And in terms of what is really causing this rebalancing are mine closures. Big companies and some of the leaders in the uranium mining space globally, Kazatomprom, which is a state-run uranium mining company in Kazakhstan, Cameco, these guys are shutting down some of their best mines and reducing production. And I think this is the best signal for investors as to the fact that at these levels, at $27 per pound uranium, it's difficult, next to impossible, to make money. And many of the long-term contracts that were keeping producers in production are rolling off. Big event this year and going into next year will be the privatization of Kazatomprom. Privatization events from Eastern European or Soviet-era companies are always big events. There's a lot of wealth that gets created around these types of events. The world's biggest uranium miner, Kazatomprom, has already filed its IPO documents with the London Stock Exchange. They're out doing a roadshow with investors this coming week, starting tomorrow. And so I think this, coupled with the supply reduction, means that the world's biggest suppliers are now becoming very price disciplined. Whereas before they may have been very focused on volume and having the largest amount of volume, they're now focused more on bottom line and profits and making sure they're more profitable. This is good news if you're a uranium investor. And to put it in context, Kazatomprom is roughly 40% of global production. That's 4 times the size of Saudi Arabia when you compare that to oil production and how significant that is. Here in the US, we've had a number of catalysts and developments as well. The US market is a fascinating one because the US is the largest consumer of uranium, and yet US production this year is on pace to be at the lowest levels since 1949. Put differently, there are 98 reactors operating in the US, generating 20% of electricity. Uranium production this year will be enough just for the needs of 1 reactor, and there's 98 of them. So you start to put that in perspective, and you must realize that this is perhaps not necessarily a bipartisan issue. I think whether you look at it from the right or the left, you realize that such an important raw material, there shouldn't be so much dependence on it on foreign sources. And so as a result, we're seeing unprecedented action being taken by this administration. Department of Interior has added uranium to the list of critical minerals. Department of Energy has ended a very negative barter deal that they had to sell uranium into the physical market that was hurting the producers. We've seen Department of Commerce launch an investigation under Section 232 into uranium and its national security implications. Never before have we seen so much support from various branches of US government recognizing that we can't be dependent on the raw material that is needed not only for the baseload power generation that 98 reactors are providing, but at the same time, whether it's the nuclear navy or for medical purposes, uranium is a very important and strategic commodity. All of that to say, since Fukushima, we've seen the uranium price drop from $70 per pound down to roughly about $17 to $18 per pound. You see, we've had two false starts in terms of the price recovery over the last few years. A couple of double bottoms have been placed in. And this time around, it looks like this recovery is on course to be more sustainable. Again, I think it's because perhaps it's backed by real cuts in the market that are rebalancing the market. Today, year to date, the spot uranium price is up about 30%. We were at about $21 per pound. Earlier this year, we're approaching $28 per pound, so almost 40%. That is probably right after vanadium, making uranium one of the best performing commodities year to date. Now, moving forward very quickly on Uranium Energy Corp, as a US company, we have continued to maintain a 100% unhedged profile. We stand to capture every bit of upside that the uranium price could bring us in the recovery cycle that we're anticipating. We've been very aggressive growing our business into Wyoming and making acquisitions during the down cycle. And being in a position where when you look at all these different assets that UEC has put together, I would say today Uranium Energy is a very asset-rich company. And what do the assets look like? First and foremost, the uranium resources from South Texas to Wyoming's Powder River Basin to Colorado and Arizona. Secondly, our Slick Rock project in Colorado contains 70 million pounds of vanadium resources, very high grade at over 1%. And people don't recognize that this is one of the most attractive vanadium resources in the country. We like to find ways to develop an advanced value for this project. Vanadium prices, of course, have performed brilliantly. First time in my career that I see vanadium prices trading at a higher level than the uranium price. And of course, our world-class titanium deposit, Alto Parana, down in Paraguay. It's a very large titanium resource, and we have plans to advance that project and eventually look to monetize it. Where we expect to have news and activity in the coming weeks will be, and in the coming sort of weeks and months, down at Reno Creek in the Powder River Basin of Wyoming, we've done a number of database and land acquisitions under an existing mine permit that we have at that project. We want to issue an updated 43-101 resource report there. And then we would commence to complete an updated economic study on that project. We are working towards advancing our Burke Hollow project, where we expect to get a radioactive material license, a very key final permit for us at that project before the end of the year, and then look to commence drilling to define our first production area at that project in the new year. We've recently completed an equity financing that added $20 million to our treasury. As of the last filing that we had, or the press release that we had, we have over $25 million of cash on hand. So the company is a company with diverse set of assets and resources, with our own processing plant at Hobson, giving us infrastructure advantage. We can process our own uranium, with fully permitted projects in Texas and Wyoming that allows us to build a production profile of up to 4 million pounds per year. If you look at our 2 million pounds of physical capacity at our Hobson plant, and our 2 million pound per year NRC license at our Reno Creek project in Wyoming. 4 million pounds a year is an exciting profile to have for a uranium company, especially from US soil, at a time where I believe over the next year or two, there could potentially be a premium on US production and US uranium. Our titanium and vanadium resources give us extra optionality on top of a very solid production-ready uranium business.